Chapter 3, brief exercise number 11. Prepare a trial balance. What is a trial balance? Well, a trial balance is a list of accounts and their balances at any given time. The accounts are listed in order in which they appear in the ledger. That means assets, liabilities, equity, revenue, and expenses in that order. Debit balances are listed on the left column and credit balances in the right column, hence the T account. And most importantly, the totals of the two columns must equal. Now, what's next? When is a trial balance done? Well, a company usually prepares a trial balance at the end of an accounting period. Well, what is the end of an accounting period? Is it the end of the day? The end of the month? The end of the quarter? The end of the year? Well, those are all correct answers, and there's even one more. At any point in period that the company needs to end a accounting cycle. Right now, we have gone through analyzing, journalizing, and posting, and we're focusing in today on preparing a trial balance. Why do you do a trial balance anyway? Well, the trial balance provides the mathematical equality of debits and credits after their posting. Under the double entry system, this equality occurs when the sum of the debits account and equals the sum of the credits account. Well, again, debits and credits must equal. A trial balance may also uncover errors in journaling and posting. You'll see why. In addition, a trial balance is useful in the preparation of financial statements. The task at hand is to prepare a trial balance for Peak Company on June 30th, 2017. Note, all account balances are normal. Well, what does it mean to be normal? Well, a normal account balance for an asset, that means it's a debit. A normal account balance for a liability is a credit, and so is equity a credit for a normal balance. Revenue is also a credit balance, and expenses are normally a debit balance. Keep those things in mind. As we talked about before, the trial balance is going to be in a specific order: assets, liabilities, equity, revenue, and expenses. So if we put them all in the right spot, here's what it's going to look like. Peak Company, trial balance, and it's a specific date, June 30th, 2017. Not year ending or not month ending, but on a specific date, because the trial balance is a snapshot in time like the balance sheet of your financial statements. So we have all of our assets, cash, accounts receivable, and equipment on the debit side of the equation. We have our accounts payable, which is a liability, on the credit side. Common stock, which is equity, on the credit side. Our dividends, because it's a payment of equity, is a debit side. And our revenue is a credit balance, and our wages and expenses are debit balances. And if you notice, all the columns add up to $27,600. And keep in mind, anytime you're doing a total like this on a trial balance, you'll have a single subtotal line and a double to say that is the end of what we were doing for that particular section. Now, limitations of a trial balance are: a trial balance does not always prove that all the transactions have been recorded, and there are numerous errors that may exist even though the trial balance columns total agree. For example, you may have things like transactions that were not journalized. You may need to correct a journal entry that wasn't posted, a journal entry that may have been posted twice, heaven forbid, incorrect accounts that have been used in journal postings, or offsetting errors may have been used in recording the amounts of the transaction. In other words, as long as the equal debits and credits are posted, even though in the wrong accounts, or in the wrong amounts, the total debits and credits will still equal. So be careful and remember, despite the limitations, the trial balance is useful in screening and finding errors and is frequently used in practice. And I can tell you for sure, we definitely use it. Now, on a closing note, we want to make sure we identify this little ethics note. An error is a result of an unintentional mistake. No harm, no foul. It's neither ethical nor unethical. An irregularity, though, is an intentional misstatement. This is 100% unethical and not something that is tolerated.